Morning folks, quick update while I've got my mic and camera on, and I wasn't going to do this, but let's just go through it anyway. The euro and the pound, we just saw a 0% inflation rate for Great Britain this morning, and as a result the pound has dropped off a bit. I'm looking to buy a little bit more down here at about 1.2960. That's the 618 fib, the golden pocket, and the trend line and the 100 period moving average. I still think that the dollar needs to correct downwards again, and that will push the euro and the pound up a wee bit and the dollar yen down. Let's have a look at the dollar index and I'll tell you why. Because this is moving up, and I think we're probably going to have to actually get into this block now. There's the 200 period moving average, there's that big order block, and the underneath of the rising channel looks like we might have to retest that. So just a little bit higher, we're at 103.30 now. We probably get up to 104.20, somewhere around there. Maybe 104.50, and at the extreme, 105 something. I don't know. But in any case, we have a very small long position on the pound and the euro as it stands at the moment. The euro's at its 200-day moving average too. There it is right there. And we're just resting on that, having broken a little bit down below this order block here. So let's see how we go with that. Little position on the euro, little position on the pound, looking for longs there, and a tiny short on the dollar yen. Now, going across to the indices, the NASDAQ and the S&P both fell off yesterday, as did the US 30. We're short from the very top on all of these, but we also have a short position from slightly lower down on NASDAQ and S&P. Whether we'll see continuation of this or not, I don't know, but it certainly looks like it. And we've definitely reached an overextended phase in this market, for example, on the US 30, reaching the top Bollinger Band, the second pierce. Normally the second pierce is the rejection pierce, sometimes three. And we're also at the top of this rising channel and the top of this rising wedge. So we've got a chance that this could come down, and I think we could revisit this order block down at the bottom here, or at least the bottom of the channel and the 200-day moving average. Same sort of thing on the S&P. Once again, a rising wedge, all sorts of rising wedges. And we've got divergence on the stochastic, the MACD, and the RSI on all of these indices, including the NASDAQ, S&P, and the Dow. So we're short on all of them. We've got a couple of other positions. We're short on NVIDIA from below where we are right now. Actually, we took another short position right at the top here yesterday. So we're still a little bit out of the money on NVIDIA. And if we make yet another new all-time high, I'll definitely hedge this one. We're also long on Tesla. And you'll see that I don't have my Coinbase chart in here anymore because we took profit on Coinbase yesterday right at the top. We're short on XLF right at the top Bollinger Band here. That moved down a little bit. A little bit of a mean reversion trade here, and whether this is going to continue to move down, we'll have to find out. I think that you'll find that this financial sector might run into a little bit of problems later on this year. Right, now we've got the metals and Bitcoin. Gold we took profit on just a few minutes ago, right at the top here. I think this might carry on, but I'm just hoping for a little bit of a dip. I'm not too sure how this week's going to pan out, particularly with that zero inflation rate print from the UK this morning. That might put a little bit of pressure either way on interest rates, and I'm not 100% sure because it depends on how the dollar follows suit and the Fed. And we don't know how the Bank of England, and then there's a lot of talk about the European Union. And of course, interest rates affect gold as much as they do anything else. Perhaps gold's a little bit more sensitive. So I'm just waiting to see what happens on gold. We might get back into this maybe on a dip down to the trend line. And there's potential, I think, for us to go up to about 2,700, maybe 2,800. Maybe we can get a little dip down here. There's the 20, maybe we can get down to the 20 period moving average and the swing high. I'll certainly be interested in adding some more longs if that looks good. Then when it comes to Bitcoin, we're long on Bitcoin too. And there are all our positions. The size of these blobs reflects the size of the trade positions that I have on these, relative size. And we're just butting up against this long-term downward trend line. Have a look at some of my previous videos to see the way I view about this, but I think we're going to 104. If we don't get to 104, then 94, maybe 98. We've got to get through here. It's a very long-term channel line that's been here since the beginning of the year. So there's going to be a little bit of toing and froing, possibly a little bit of a pullback. So we took 30% of our profit on Bitcoin just a few hours ago too. And I'll be looking to see what happens today at this channel line and perhaps buy more into dips or on a breakout and a pullback through the channel line. I'll be looking for something like this on a breakout, like that. Okay, that was a better drawing. Or if we don't break out now and we dip down, possibly something like that. And then another retest of this top over here. So that's the sort of thing on Bitcoin. We have a healthy position on this, but I have taken 30% profit so far. I'll be potentially looking to add that 30% back on a dip down to one of these order blocks or fair value gaps, or on a breakout and a pullback through the top. Let's just re-look at that one more time. So we'll be looking to buy either there on the breakout pullback or buy down here on the pullback breakout. Right, natural gas holding at that support so far. Let's go to the Henry Hub. I don't want to cover this too much because not much has changed since yesterday. And let's look at this on the day chart. You'll have seen this from yesterday's video. There's the blob I drew in at the 100-period moving average and this order block. The Fibonacci number, well, it's not a Fibonacci, the 50% retracement. There's the 50 just curling up. That's the 100-period moving average. And I think we might just bounce around here, try and form a base, and then begin to move up. I haven't added any additional long positions on just yet, but I'll be certainly considering that in the near future if the chance arises. Now, WTI, we're short, and we remain short on oil, on both Brent crude and WTI. This is the one we're trading right now. And once again, please have a look at some of the previous videos. This is my path. And so far, so good. We did have a bit of a scary spike up there, but it just gave us another opportunity to sell at the 200-period moving average. Target for WTI is into the mid-60s and then low 60s and then probably below 60 into the 50s. Brent crude should follow suit, although that's slightly more susceptible to upsets in the Middle East and the Ukraine. And we're also long on uranium. We've taken some profit on UEC right at the top here. We're out of that one for now. We remain long on URA. There's our entry point on URA down at just below 23. We're at 30 now, and UEC we got in at around about 4.2 and we got out at about 7.4. We're also long on the VIX, and that will move up if it wants to, depending on what these markets do this week and moving into the elections. Only a couple of weeks and a bit to go. Can you believe that? We're also still short on the dollar South African rand and the pound South African rand. And then going across to the softs and the grains, I tried to buy some more soya yesterday actually, but we just didn't get quite there. I wanted to buy at 980 and we got down to 982 and I missed the entry there. That was the 78.6% Fibonacci, and a strong and continued bounce from here will mean that this instrument, soya, is likely to move up quite dramatically. We've been long on sugar and short on cocoa. Cocoa's actually moved back into the zone a little bit too aggressively for my liking, but let's just see what happens. We've got the 78.6% Fib here at about 8,900. And we've just broken up through that 618. I was hoping we'd hold below the 618, but we had a strong rally yesterday. And I don't want to give up too much of the profit that we took. We got in short there, got out right at the bottom at that black line, and then resold there. So I don't want to give too much more of this back. However, I must give it some space. So let's have a see and a look what happens here at about 8,900, maybe 9,000, maybe a little spike through there up to some of these previous highs. If we don't turn around there, I'll be considering hedging this. We made a fantastic profit on that short. I don't want to give it all back. I'm hedged on coffee, corn, and cotton. Nothing else to report on those right now. And we're short on orange juice, and we're long on wheat. And yeah, and that's it. Okay, folks, just a quick update. I had my mic and my camera on, and I was doing some other videos for my private group. So I hope you found it useful. See you in the next video. If you did like this, please like and subscribe. Take care.
Stocks rising, markets parabolic. Bag me some cheddar, ain't no alcoholic. Charts looking sweet like a dodgy pie. Strategies tight, made a one-fly guy. Tickets on fire, pockets getting deep. Gravy boat overflowing, losing no sleep. Stop loss in place, man, I'm wrapped up good. P's and Q's proper, no misunderstood. To the moon, diamonds in me hands. Forget the fun, I'm the man with plans. Profit traders popping, no time for scams. Ride this rock.